Welcome to the December edition of the Beyond Wealth Advisors Economic Update. I'm John Cleaver, financial advisor. With me today is Scott Hawker. Welcome, Scott.
Thank you, John. Thanks for having me.
Absolutely. Well, it's December, believe it or not. 2024 is coming to an end, and quite the year it's been. Hopefully you had a great Thanksgiving. Looking forward to a wonderful Christmas.
Yeah, absolutely. It's been a great season and great end of 2024.
Yeah, fantastic. Well, as we do wrap up 2024, we're going to think about 2025 a little bit today, and we're cautiously optimistic as we transition into that. But before we do, let's look back at some of the political and maybe economic highlights from the month of November, and then we'll look forward to 2025. All right, so as we look at the November highlights, I guess the first thing that stands out is the election. Of course, the Republicans swept the White House, the Senate, and the House. And while that's, potentially, good news in terms of getting things done, they got a pretty slim margin. And so it'll be difficult to get significantly things passed that they want to accomplish. But certainly that is something to be mindful of as we go forward. I think the other thing that's probably even more important is that we've seen consumer confidence continue to grow. In fact, as it's measured in the U.S., it's actually reached an all-time high since July of 2023. And so, just people are feeling good. We see that as you're out and about. Consumers are just seem to be doing very, very well. And of course, the topic of inflation. We've been talking about inflation all year. And, inflation expectations have come down. We've actually seen inflation come down to a 4-year low. It doesn't feel like that because things at the store can certainly still be very, very expensive. But inflation has tampered some. And we know the Fed still wants to get down to our mandate. And we're not there yet, but certainly that's helped as we think about what's happened in the month of November. We also had a rate cut. Whether it was politically motivated or not, we'll never know. But we did get a 25-point rate cut in the month of November. We may get another one in December. We'll see. That's certainly something that we're keeping an eye on. And, lastly, I think as we look back over the 10-year Treasury, we've seen it increase in 2024. And so currently sitting at just a little bit over 4%. We certainly expect that to maybe stay in that range just because of the tension between the deficit and just everything else that's going on. So that's a lot, Scott. And as we think about the year that we've had in the economy, it's been fantastic. The market's been fantastic. Certainly enjoyed the returns that we've seen. But the big question is, and as we look forward to 2025, I know we're cautiously optimistic. So the question is, can this continue? So over to you. What do you think?
Okay, great question, John. That question's on a lot of people's minds right now. Economic growth has been more resilient than expected. However, we still expect GDP growth to slow to about 2.1% for 2025. As moderating job growth and the cumulative impact of rising prices dampen consumer spending in the months ahead. The best case for a soft landing remains intact, though, as Fed rate cuts, slowing but still positive job growth and healthy spending prolong the expansion.
Yeah, you're absolutely right. That's I mean, it's really incredible when you stop and think about what's happened. And, even in November, we saw equity markets expand. In fact, the smaller companies actually expanded at a rate significantly higher even than just the broader market, which is something that we've kind of been expecting, maybe been waiting on for most of this year. In fact, they were up 11% over the previous month, double digits. And really, we're starting to see that spread between large cap and small caps widen more than we've seen previous this year. So, yeah.
Yeah, and that's a lot of that is obviously interest rate driven.
Yeah.
And so we do believe that's sustainable as we do see interest rates start to come down. That's not to say that large cap equities were down. They were not. In fact, the S&P 500 was up just under 6% from the previous month and surpassed 6,000 for the first time ever. Okay. The resilience of the U.S. economy and the optimism following the U.S. election led to a broadening of the equity market performance, as well as equal weight S&P 500. As the equal weight outperformed the the market cap weight index for the fourth time in the last 5 months. In fact, all S&P 500, all 11 S&P 500 sectors were positive for the first time since March. Consumer discretionary, financials, and industrials led the way. Year to date, all sectors are up double digit except healthcare, and healthcare is up 9.4% on the year.
Wow. Yeah, it's really quite amazing when you do stop and think about it. And I think one of the things we've been talking about most of the year is we needed a broadening of the market. And to hear you speak about the different sectors and the positive nature of the different sectors, and you're starting to see this really play out, where it's not just a few individual stocks, quote unquote, the Mag 7 that's really driving. They've certainly performed, amazingly, but it's great to see that other parts of the market are broadening out, and that's really a healthy sign as we think about why would be optimistic going forward into 2025. It's because some of these undervalued and quite honestly companies that maybe aren't reaching their maximum yet are starting to perform better. We're even seeing that a little bit internationally, of course, too. Which is a positive. All right, so when we think about going forward, and I mentioned it right there, there's some reasons why we're cautiously optimistic. What are some other things that stand out to you, Scott, that would point us towards that in 2025?
Solid fundamentals, in a favorable macro backdrop remain supportive for equities. Definitely. That said, near-term risk includes stretched valuations for sure, in particular in large cap. Investor over optimism, government policy. There's some uncertainty there that could lead to some near-term pullback.
Yeah. I think we've been expecting this most of the year, right? So the idea that if rates do come down, that's potentially opportunity for companies to continue to grow and expand. We just haven't seen it, and obviously we didn't need rates cut to achieve this so-called soft landing,
right?
But that's something that's certainly out there, and we know there's still a fair amount of cash on the sidelines too. That if we do get a potential pullback, we often see that money come back into the market.
So also bond markets had a strong November.
Yeah.
Despite increased rate volatility surrounding the election, which did drive rates higher initially, they then eased, in the back half of the month, and all major fixed income sectors into the month of November in positive territory, led by the credit related sectors.
Yeah. The bond market's been really interesting to watch. I think, going into the year, we kind of expected it to, maybe even outperform more than it has, just, kind of anticipating those rate cuts. And, as they didn't come, they didn't come.
Yeah.
We really had to kind of be patient with it. And I think, those investors that are maybe more on the conservative side, that are maybe more balanced in terms of how they're allocated and have those fixed income positions, are that day's coming, right? And we certainly anticipate that bonds are going to continue to move in a positive direction. I think what's most important right now is just just looking forward. Obviously coming off of a strong year, 2024. I think sometimes people are just really curious. Can this continue? And I think that's really the theme of today is, yes, we're optimistic about moving forward in 2025. Where's that optimism come from, right? Well, it comes from the fact that, companies are doing well, profits are high, interest rates potentially have opportunity to come down, inflation seems to be under control.
We're past the election.
So that's off the table. And this idea of a soft landing, I think that's the theme of this year has been, can we come into this year and finish the year without, slamming the economy into a brick wall? And so far, so good. Whether or not we can continue that, and I think that's why we're cautiously optimistic. There's a lot of things to look forward to in 2025, potentially less regulation, maybe lower taxes. Certainly companies that are making money, that means that's generally good for stocks,
Yeah,
right?
yeah.
But that doesn't mean we won't have headwinds. And I think that cautiousness comes from, can we really get inflation where it needs to be? Because if inflation spikes again, then quite frankly, they're going to have to tighten.
Yeah.
And if they tighten, then that's going to cause another slowing of the economy.
So thank you, everybody, for joining us today. Thank you for John. Thank you to John, and thank you for the rest of the BWA team. Most of all, we want to say thank you to our clients. As you're looking at the rest of 2024, we recommend reaching out to your advisor if you have any questions. And as we are planning towards next year, it's been a great year. A lot to be excited about, and we just want to wish everyone a happy holidays, a Merry Christmas, and a happy